April 9th, 2024. Late in the day, we got a vacuum test of the open of the day, which is relatively common in trading ranges to get those sort of vacuum tests. The initial vacuum, 72 is a pretty climactic bar, but the initial vacuum test was the top of the sell climax. You can see we've got a giant sell climax here, and we tested the top of it during that. So that's why we found sellers up here. And, we test a lot of climaxes in trading ranges. You can see down here, we tested the 27 low, which is the bottom of this bi-climax. So testing the bottoms of bi-climaxes and the tops of sell climaxes is extremely common in trading ranges. Bar one, a bear bar. If you keep in mind the context on the daily chart, we had an inside pattern. So there's potential for some sort of breakout today, or at least a breakout attempt. And on bar one, you can see it was a failed breakout above yesterday's high. So possible we get the failed breakout and a reversal down. And it was also a failed breakout of the prior day's high. So it's a failed breakout of the entire II and a reversal down from the gap up. So, I thought, one of the better looking contexts to take a sell like bar one and look for it to be the high of the day. I thought maybe 30% chance that it was the high of the day, but I wasn't, I don't trade the first 6 bars of the day. So I thought it was reasonable to sell bar one for sure, but I didn't personally do it. If you do take that sell, you probably just sit on your hands for a while and, probably try and find a way to get out somewhere down here. Yeah. But anyways, bad follow through on bar two. So disappointment for bar one. You can see bar two retest the open of bar one. So retesting the open of the day. Bar three closes near its low. It triggers the low one short below bar two, but really not all that great to be selling bar three. I think it's a little better than selling bar one, but probably still only a 40% chance of a swing trade. And I thought bar four was really interesting. It was closing right around yesterday's close, which is the middle of a trading range. So I think difficult to sell. It's been relatively parabolic so far today. We're probably going to get a pullback before we go too much further down. But bar four was a really strong bar, and it did close decently below the moving average. So I thought that was really good for the bears and, a bit surprising. Bar five, more follow through for the bears, but a big tail on the bottom, not as good as it could be. And then an inside bar, bar six. When you get an inside bar like that, we're probably going to start to go sideways pretty soon. And you can see we got a doji bar. It's an outside bar on bar seven. So we get an inside bar and an outside bar. But I think that, for the most part here, this is going to start to go sideways. When you get a doji bar, generally in some sort of sell to close market, the market's going to start to go sideways relatively soon. You can see it was a low one on bar seven, and we got a failed breakout below on bar eight. Bar nine, a bull bar. You could argue it's a high two for the bulls, but really not a very good buy. We've had too much selling, and any reversal up here is probably going to be minor. They might try and test the 3 low since that was a potential swing point, but I think that for the most part here, we're going to get a very minor reversal up. I thought better to, stay out and look for some sort of bounce for, a couple legs and then look for a swing sell down, maybe towards like a channel line if we started developing a channel. So maybe look for a sell somewhere over here, but obviously never quite got there. Disappointment on bar 10, a doji bar, and then an inside bar, bar 11. This is a pretty tight trading range. I wouldn't be too bothered if you got short early in the day and you got out above 9 and you weren't able to get back in until a little bit later. You could, in theory, sell the breakout below the low, the 9 low, but that's, you're betting on this happening, and this is a low probability event if you do that, so I wouldn't do that. So big bear surprise bar on 12, definitely can sell the close at 12. We could be forming some sort of consecutive sell climaxes on the open. When you get consecutive climaxes on the open, sometimes you end up getting a big reversal. And, it wasn't quite consecutive sell climaxes today. We only really got 2, and the second one was, huge. It doesn't look the way that sort of pattern would normally look. I should have a couple examples in here of consecutive seller buy climaxes. There was a couple examples, something like 1, 2, 3, but usually when you get, this example I was looking for. 1, 2, 3, relatively clear, 3 climaxes, and then a channel up the remainder of the day. But we didn't quite get anything exactly like that today. So ended up instead 12, we get big follow through 13. So 12 is a sell to close bar. It's a bear surprise. It's enough for at least a second leg sideways down. Good follow through for the bears on bar 13. Again, enough for at least a second leg sideways down. We're getting follow through. 14, more follow through for the bears. I think we're getting probably, we're at least getting a second leg down at this point. We might get some sort of measured move down, but this is really climactic, so we might have to get a pullback first. but good bar on 14, sell the close 12, 13, 14. Big bear bar 15, probably still sell the close. I thought at this point, we were relatively low. I thought we might try and test what I thought was going to be the bottom of the trading range somewhere down here. We obviously ended up more back in the middle of the trading range, which kind of confirms for me. I think that this is the trading range. Essentially this big bar right here, I think this is going to encompass pretty much the whole trading range. We tested the bottom of this bi-climax, which again, I thought was important in a trading range. So I think if we get up here, probably sellers not very far above. If we get down here, probably buyers not very far below. So I think we're going to be between 5,200 and 5,300 relatively for a little while. But 13, 14, 15, good bear bars, tail on 15. And you can see 16, the momentum's starting to wane. It's a smaller body and bigger tails on both sides. 17, another bear bar, but tail on both sides as well. So again, momentum is definitely starting to wane. Usually you want to see continue, if you're selling 12, you wanted to see big bar 13, big bar 14. You don't want to sell 12 and then see 16 bars like 16 and 17. You want to see big follow through bars. So traders are going to be more and more eager to get out. You can see as 18 started to bounce, traders quickly just started flattening their positions and exiting at the market. Another side note is we did not break out of the 18 bar range today. About 90% of days break out of the 18 bar range. So once every couple of weeks, you'll have a day that does not quite break out of the 18 bar range. And today was that day. 18, a big bull bar closing near its high. It's probably a minor reversal. When you get a big sell climax on the open, it's possible we just get a channel up the rest of the day, but usually get some sort of II or, not usually a big bar with big risk. Bad follow through on 19, which is relatively expected. You can't buy above 18 and be surprised when you get bad follow through. I think in general, if you're buying here, this is huge and you're probably willing to scale in lower. The follow through, you're going to get some sort of deep pullback at some point. It's going to be hard to sit through. I thought, it would go even more sideways than it did, but there were hints that we weren't going to go as sideways. So you get a bull bar closing near its high on 20. And look, the bears who sold above, if you're sitting here and you sell above and you have an order to sell above 17, you got to be thinking, with all of this, I might have to sit through a pullback, but very, very likely I'm going to be able to scale in above 17 and get out. And if you sell above 17, you see 18, that's probably not really what you wanted to see. But some of those traders, they might scale in more and they're trying to get back to the 17 high. And look, we never got there. So the traders who sold above 17 are really disappointed in 18, and they're not even able to get out, relatively quickly here on 19. And they were really never able to get out. They would have had to, sell below a bear bar closing years, somewhere over here, and look to get out around break even on the whole trade. But I think that, it was really important that we kept this gap open with the 16 high and the 19 low, because that's a set of trap traders. Big follow through bar, like I said, on 20, but a big tail on the top. Bear bar closing near its low 21, but the channel is relatively tight. A good bull bar on 18 and 19, 20, and 21 are relatively tight bull channels. So I'm not sure if we're going, we're going lower here. 22, a big bull bar closing near its high. It's 3 pushes up, 18, 20, and 22. But I think that in general here, this is more than the bears wanted to see from the bulls. So it's going to be hard to take a sell. And that's why 23, big tail on the bottom. It's a wedge, but it's really not very good. And you got to also notice it's a bull micro channel, right? When was the last time we traded below a bar? Well, that was bar, 16. So, like a 6 bar micro channel essentially for the bear or bull micro channel here. 24, a bear bar, but a lot of overlap. I wouldn't sell. I would wait for more follow through. Ideally, you're going to get, some sort of weaker second leg up and go sideways and then get a big reversal down and a big second leg down from this. Something to note is that we still should get a better second leg down from this. If you're taking sells in trading ranges, it might test all the way back to your entry price before it goes to your profit target. So it's not that surprising that we ended up getting some sort of buy the close rally and we're ending up here for the day. But I still think in general, this was strong enough to get a second leg down. So as strong as this rally is, it's about as strong as this was. So relatively neutral. I don't think we're just going to get a big rally tomorrow. I think that we're probably going to be sideways. This might get some sort of second leg bounce, but I still think that this is probably going to get a second leg. I was surprised we didn't test down here. We probably will at some point. I don't know when. It might be a little while. Probably not tomorrow, but maybe I think at some point we're going to head back to 52.10 and we'll probably find some buyers there when we get there. Because bears sold the close of 17 did a reasonable thing. It was a sell the close bear trend, but they were never let out. And so I think they're going to end up being let out at some point. 25, bad follow through for the Bears. Big tail on the top, so really not as good as it could be. It's 3 straight bear bars, which is good, so it makes it harder to want to buy. But again, I thought that you want to see a better sell off if you're a bear. And 26 is a bull close. So any bears who were selling, hoping to get more bear closes, maybe only a 40% chance this starts to turn into a big bear trend. I thought more likely it had to go more sideways. And any traders who were short are disappointed in 26, and they just buy the market basically on 27, disappointed. I think also an open gap with, if you sold above 19 and you didn't get out immediately, that was your only chance to get out, was during 21. You can see those traders were not let out during 26. And then again, look here, we got a huge bull bar 27, closing around, not quite on its high, but decently, and follow through 28. There's big tails on these bars, so hard to get long. I thought it was really hard to get long for this rally. But there were definitely, you could have bought breakout points, things like that. But I thought in general, hard to get long for this rally. 29, disappointment. We traded below 28, probably buyers below, but you can see we do not overlap with the 22 high, which is really important because traders who sold this breakout are now, they're now trapped in and they were not let out. So that's more fuel to the upside. But this is so big, we're probably going to get a lower high. You have to look at essentially this big thing. I think that's a helpful thing to start thinking about is the moment you see a big sell-off like this, just immediately think lower high because you're probably going to get one. It's pretty unlikely that we were just going to channel all the way up, straight up, and not get some sort of attempt down. So generally, when you get something like this, you should be expecting a lower high. And when you get something like this, you should be expecting a higher low, which we got. 30, it's a wedge, 20, 22, and 28, but I'm not selling. This is way too tight of a channel. And you can see there end up being buyers below 30, and we go outside up. 31 tests back to the 30 low. So if you sold below 30, scaled in above 30, you can see on 32, sorry, I meant 32, not 31. 32 tests back to the 30 low. So the bears, they sell there, they scale in higher above the bar, and they're getting out during 32. It's still trading range price action overall. It's a tight bull channel, but it's not a huge, strong bull trend. 34, a big tail on the top, disappointing. I think the target is the 9 low. Bulls who bought below bar 9, basically fading this breakout, did a reasonable thing with how tight this trading range was, and they should be able to scale in and make money. So I thought that we would probably get back to this 9 low at some point today. We might channel straight up there, but if we start to get a pullback, I thought it was reasonable to keep this target in mind. 34, it's again some sort of, this is making wedges constantly. I'm not selling anything against something that's this tight. So 34, it's a short, but not very good after 3 straight bull bars and in this tight of a channel. Bad follow through 35, almost outside up. You could argue it's outside up. And failed breakout above 36, a bear bar closing near its low. It's the second entry sell, so probably better than 34, but it's a tight trading range, 34, 35, 36. I'm not taking it. I think sideways here. Bears have a lot to prove to me before I'm willing to sell. And then a big bull bar 37. We're towards the top of this channel like we have been. Maybe we get up here, but I think that this overall is not really all that great for either side, but definitely clearly always in long. Inside bar 38, inside bar 39, so it's an II, it's a triangle. I think you can sell below 39, but it's just, this has been a really tight channel up. If you're selling for a second leg from 12 to 17. So, that sell-off was obviously much stronger than this bull channel, but I just think it's difficult to fade something that's that strong. You sell 39, you get kind of weak follow through on 40, but relatively expected with how strong the channel was, and then a huge bear bar closing near its low 41. It's, you could argue 27, 28 is a spike, and then the pullback's 29, and then you got the channel phase up, and you can see 41 tests the bottom of that channel. It's a sell climax on 41, but it's possible that we start to get a channel down, and instead we don't trigger the sell below 41. We get bar 42, big tail on the top. 43, a big bull bar. Why? Because the bears who sold the close of 41 are disappointed in 42. They were hoping they were going to sell and get in a little bit early. You can see there was a micro gap down. So they sold the close hoping to get in a little bit early and front run the move down. And instead, they never got triggered. So maybe they scaled in around 50% of the bar. Not quite, so a little bit before 50% on 42. And then they got out as it traded back down to their entry price during 43. So bears buying back shorts causes 43. I think 43 is a reasonable buy. The problem is you just faced 4 straight bear bars, so we might get some sort of lower high. But in general, it was a wedge attempt, and we had, you could argue that this is only one leg down. but 43 does accomplish the second leg sideways to down. I thought there was enough of a chance that we started some sort of rally up to the 9 low. And if you bought above 43, you had 2-to-1 risk reward. So I thought it was an okay thing to do to buy above 43 for a swing trade. You get follow through on 44, but disappointment 45. You can see 45 tests the 41 low, or the 41 high, which is the top of the most recent sell climax. So not too surprising we find some sellers there. Disappointing follow through on 46. Probably sellers above, probably buyers below. I think it's a high one for the bulls. They want some sort of good bull bar that's going to be surprising, and bears want to find sellers above that are scaling in higher. So bears see this whole thing as a pullback from their bear trend from 38 to 41. That's where it started. And they see this whole thing as a pullback. Bulls see 42, 43, 44 as the start of a bull trend, and they want the high one to work in the spike phase of their bull trend. So big doji bar 47, failed breakout above the 45 high, which I thought was really important. Bulls could have gotten the bull trend there, but they needed 47 to be some sort of bull bar, hopefully closing above the 45 high, and instead they got that. So a lot of bulls probably exit below 48. 48 high 2, or below 47. 48 high 2, but I'm not buying. It's 4 straight bear bars and a lot of dojis. 49, bad follow through for the high 2, but 5 straight bear bars, but basically mostly dojis. I would rather be flat. And I think 50 is too little too late for the bulls. Following 5 straight doji bars, I'd rather not buy. 51, big outside down. It's probably always in short, but not quite closing on its low. Bears are looking to get some sort of swing down to the 17 close because that's where traders sold and are trapped. And they're hoping to close all the gaps that bulls created earlier. Follow through on 52, but a tail, not really as good as it could be. And then sellers above 52 during 53. I think, 2 legs down, maybe we get a third leg down, and 54 is a third leg down. 45 through 49 is the first leg, 51, 52 is the second leg, and I think 54 could be the third leg down. So better not to sell 54. 54 is also not breaking out of the low of this trading range. So the 31 or the 29 low, the 41 low, all those areas are possible trading range spots, and you can see just basically a big failed breakout on 55. So it's hard to sell 54. If you do, you have to be quick to get out. Once you see 55, you probably just got to get out at break even, which is exactly what happened on 56. You can see the bears who sold below 54, disappointed 55, are getting out as 56, basically the tail on 56, and that's causing the bounce. 55 was essentially some sort of wedge. You could argue, like 32, 42, 55. And you could argue, some sort of micro wedge with like 46, 52, 56, and a failed breakout below that channel line from 46, 52. But I think in general here, it's just you're not buying above the bear bar. It's important to be flat. Both sides need to prove something to me if I want to buy or sell. Good follow through for the bulls on 56, but probably getting back to the 55 high. You can see traders sold 55, scaled in higher, used 57 to buy back their shorts because they did not want this to close that strong. And that's what's causing the second leg up. 58, 59, big outside down. It's a lower high, potential double top with 51. I think you can sell 59. It's a surprise bar. I think you want these bars to be surprising. 54 is not surprising enough for me to sell. This shouldn't be surprising enough to buy, I don't think, but this is a bit more surprising. I think this is a bit more surprising. So I thought 59 was an okay swing sell. But it's still in the middle of a trading range, so I don't have a problem waiting for follow through. And you essentially get a doji bar as follow through with a ton of overlap. 60 overlaps 59 a ton, which is really not what you want. 61, big tail on the bottom, tail on the top, so not as good as it could be. You can see probably sellers above 61. You can see we got them during 62. 63, doji bar. So if you sold below 59, I don't really think this is what you wanted to see. It's definitely not as good as it could be. What can happen here is if you get pretty much any sort of bull close, like if 63 is a small bull doji bar, you can get something similar to this where, you're not getting the follow through you want, and then you get some sort of small bull close and bears just give up. So here, the danger is that this is not a very strong channel, and you're potentially selling one to, a third push down in this overall trading range, in this leg in a trading range. So it's really dangerous to be short here because you can quickly just get a bounce, and you can see bulls tried to get that bounce on 65. But not enough bears gave up. 66, a low one short, but really hard to sell. Follow through on 67, big tail on the bottom. Follow through on 68, again, big tail on the bottom. And we're right here. You can see we had 41, 55, and now we have 68 overshooting these channel lines. And we're testing the bottom of 27, which is a bi-climax. So I don't think it's that good to be selling down here. And then you get 69. Bears are going to exit above 69 if you're short for any reason. And it is a wedge. You probably can buy above 69, but better to wait for follow through. And 70 is a good surprise bar, closing near its high. It's what bulls wanted to see, and it closes, a point or two above the moving average, which is really important. You can buy here and look to add on higher. You get good follow through 71. Okay to buy above 70. Okay to buy above 71. And huge bull bar 72. So still probably by the close, but 72 is extremely climactic. It's a lot bigger. You want them to keep getting bars that were the size of 70, 71. When you get 72, what happens is the trade gets crowded. So too many traders thought we were getting to this magnet quickly, and not enough traders were trapped out of the trade. You can see here what happened was traders got trapped out by bar 9, and they essentially weren't believing in the trade, and so that's why I was able to go so far. But when too many traders see the obvious magnet, we end up racing there too quickly, and trapping most of the bulls out. And so when you get such a huge bar 72, it's probably too late to be buying. 73, a doji bar. If you're long, you get out below 73. You can see the tail on 73 basically tried to rally to the 72 high where bulls, the last bulls bought and were trying to get out. 74, a big bear bar closing near its low, but the rally is too strong. You can see 75 tested the 71 high, which is a potential swing point, and I don't think it quite overlapped it. So what's the high of this bar? 41. Low of this bar, 41. So it touched it exactly. And break-even stops are dumb in a trading range, because if your stop was right here, you can see it went back to that price and bulls were willing to buy it. So bulls bought it. We got a reversal up 75. After 74, you might have to get a second leg sideways down, which 76 accomplished. The traders who sold below here disappointed this. They bought back their shorts. I assume 75 pulled back to a little past 50%, which it did. And those traders, which is also around the 74 low, that 50%. So traders bought. I think 77 is an okay buy, but it's bar 77, up to you, right? I'm not sure you want to be trading this late in the day. You only have a couple bars left to make your money. If you're trading on SPY, you only have literally one bar. So, it works out this time, but I would probably just stay away. That's the time in the day when you should be super resistant to trading. You should get more and more resistant. In general, you should get more and more resistant to trading without follow through as the day gets later. 78, 79, good follow through to the open of the day. For bears, I thought it was okay to sell 1. You probably could have sold 3 or 4, 12, 13, 14, 15. But 15, tough, pretty late. In theory, you could buy above 18. Just hard to do. You could have bought the breakout, but hard to get in on this, I think. Very climactic here. I thought okay to take a chance above 43, but you're just getting out below 48. When I'm saying these things, I'm trying to talk about always in. So theoretically, always in bulls can buy above 18. You don't really have to get out for any reason, probably until 39, where bears might sell some sort of wedge. Always in bears are going to exit above 43, so I think okay to buy above 43. Bulls probably get out here or somewhere in here in general, but I think it's really hard for bears to sell. Maybe they sell below 51, but hard to do. 54 looks like the bottom of the trading range to me. Maybe they sell below 59. I think that's a better sell. But just trading range price action, and then bulls, bears are going to exit above 69. Maybe bulls can buy if they're ultra aggressive, but I think better to wait for 70 and look to buy that. On the daily chart, huge tail on the bottom of the day today. Probably sellers not too far above here. Probably, again, it's a trading range, and this is a sell climax high, the 4-4 high, and it's around 5,300. So if we get up here, I would imagine there are going to be sellers. This is not a good buy signal bar. There are probably sellers not too far above. If we get, this was good enough for a second leg down. So this might have been the second leg down. The bears who sold this close, disappointed in this, they scale in, but you can see they got out before their entry price. So they were so disappointed in this that they're getting out, but could be failed breakout below II. Maybe we try to get breakout above II, but overall the market is entering a trading range and breakout mode. And yeah, that's today.